Hello, everyone. Good evening. This is Andy Tanner, and some of you around the world, it might be morning or afternoon. It's just a very important time, and we're just going to have a great time. The first order of business as we begin is to talk a little bit about the technology. Obviously, in the state of the world right now, online meetings have become the standard. Very valuable and grateful for the platform we've had. When we set up online training 7-8 years ago in the Cashflow Academy, we had no idea how important that was going to be now in the next year or so. So the first thing we'll do is, if you look at your GoToWebinar control panel, there's a little icon there. Some of you might be familiar with it. Some of you might be brand new. This is the way of the future, so just learn it. But you'll see there's a little place to raise your hand. And you can raise your hand if you can hear me. So there's a little button you can push. And we had thousands of people registered tonight. So we are at maximum capacity. If I don't yell out your name, don't be offended because we had thousands of registrants. But let's just look here. We have Adam Bueller right there with your hand up, and you can hear me, and Abdul, and Adam Hyen, a lot of Adams, Alicia, I can see you, and Al. We got 3 Al and Albert. So I won't get through the A's, so if I don't shout out your name, I apologize. This is how we will communicate. I won't be taking questions off a mic. That'd be a nightmare. So I'll put your hands down, and then I'll ask, did you understand this? And you will raise your hand if it's a yes, and you will not raise your hands if it's a no. And that's how I'll know whether you're with me or not tonight. So with that, I'll also, I'm really proud. We've gotten, the first message I got was from David Palesci from Italy. He says, we're locked down, but we're here, baby. And it warms my heart to see you guys doing what you're doing over there. So with that, we're going to get going. We're going to rock and roll. And this is going to be freaking awesome tonight. It's going to be incredible. So let's talk first about the email that we sent you. Good job for showing up. We said in the email that this class would go over 90 minutes, that it may go over 90 minutes. I'm going to guarantee that it will. So hang with me, focus, concentrate, because when I say there's a lot to share, I wasn't kidding around. That's the agenda. and it's a mess, right? The first 8 things we're going to lump together, and we have to do a tremendous amount of training. How many of you, by raise of hand, are already enrolled? Because we invited like everyone today. This is such an important time. How many are even enrolled in our 4 pillars, Mentor Club or Quick Start already? Just give me some hands, and I have a percentage that it gives me, so I don't have to scroll through anybody. So if you have, if you're enrolled in Mentor Club, great job. If you're enrolled in the 4 pillars of investing class, great job. Or if you're enrolled in our Quick Start, great job. So many of you are. Great to be with you. You guys know how much I love you as my students. It's a huge deal. And so this is going to be a lot easier for you guys to understand, okay? And I'm going to refer you to different parts of your 4 pillars training, and those of you in Mentor Club kind of know where we're at. But how many of you, let me put hands down now, how many of you are like brand new to this? You're like, oh my gosh, can I do this? This is new for me. Tons. So the vast majority are new. So I'm going to ask, we do things fun. We make things simple and real. And if you gave me about 20 hours, I could really show you all this stuff. I've got, 1 or 2 hours here. And so you guys lock in. I'm not kidding. You have such a learning curve tonight. It'll be fun. You can do it. You can do it. But turn off your phone right now and get your pad out and get your pen out. And the way I'm going to do it is if I get into something that's kind of hard like this, okay, something that's kind of hairy like this, I'm not going to have you new guys take notes to remember. I'm going to have you take note to say, this is on my learning list. Does that make sense? If it does, put your hands up nice and high, please. Some things will be to remember. Some things go on the learning list. If you do not know how to use a risk graph, that takes more than 10 seconds to learn. If you do not know what a delta, theta, vega, gamma is, That takes time to learn. Those are things that will go on your learning list as soon as possible, but we are going to cover them very quickly. Don't freak out if something seems a little new to you. The problem we have here is our market has melted down. We have an unprecedented challenge for the human family, okay? Big time. And so we've got to lock in tonight, and we've got to learn things faster than we've learned them, because I'm going to throw you a freaking life preserver, and I'm going to show you how to turn this thing. I apologize if I'm a little emotional, because we have thousands of people here, thousands. And I really know that the last 20 years has prepared me for this time. And so I'm going to lock in, you're going to lock in, and I'm going to give you things that are just going to be amazing to you. You're going to see what you think now is a sea of risk, and we're going to calm those seas. We're going to anchor you, and we're going to show you how you can grab the bull by the horns and the bear by the throat, or wherever you want to grab it. And we're going to rock and roll. So I'm very excited, very passionate, and we're going to rock and roll. Now, I'm not going to talk about me, because if you don't know who I am, you're just going to have to trust me that I know what I'm doing. I'll introduce some of my team, but I'm skipping that part because we don't have time. We're going to show you a bunch of trays tonight, at least 1, 2, 3, 4, 5, 6, 7, 8 of them. I usually do one on something like this, but we have so much going on and so many cool things to show you, that we're going big, we're going long, we're going late, we're going big time here. So, and then I'm going to talk to you about what I'm going to do starting March 24th. We're going to do some live stuff, and we are going to, in the next 8 weeks, do more training, more helping, more saving, more lifting than we have ever done in the Cashflow Academy. So it's a big deal, because I've gotten phone calls. Yesterday, my first phone call on Monday was from Robert Kiyosaki. And he just wanted to know what was going on, all that. The second phone call I got was from a student who it was a very special phone call. He says, Andy, you can't believe how, the Cashflow Academy has saved me. They have saved me. Thank you. I got another phone call that I wasn't very pleased with. He was a friend of mine. He said, Andy, I need to wire you $20,000 right now and go short. And I was like, why don't you just go short? He goes, well, I haven't opened up a trading account, but I know there's opportunity. I go, how do you know you're supposed to go short right now? Maybe we're at the bottom. He goes, you think we're at the bottom? And I was kind of upset, because I have offered financial education for, my whole life to people. And there's a lot of Johnny-come-latelys, I'll just say, out there. A lot of them that say, oh, now we want to learn this all of a sudden, huh? It's like the little red hen type stuff. But regardless of whether you've been with me a while or where you're saying, hey, Andy, I need to catch up, man. I need to catch up. Then this is going to be good. Okay, disclaimer. This is education. If you've come here for advice, you're in the wrong place. I don't tell people what to do. I'm going to really have to watch that line tonight, because I'm going to show you not only some of our Mentor Club stuff. Very rarely do I show my own personal trades. Very rarely. Under the circumstances, I think it's important to make an exception to that. And so I'm going to show you some of the things I've done, because they're powerful and they are inspiring, and they're big time cool. So I'm going to show you, and they're simple. A lot of them are simple, a lot of them are complex, but there's a good mix of both. Secondly is, we make talk about a world where there's no guarantees. We make no warranties, none of that stuff. We don't sit and brag about, how much money people make or whatever. That's not our style. And finally, if you haven't figured this out after this week, all investing in trading securities involves risk. And so our job is to contain that. I'm going to emphasize this several times, because we've gotten into some positions that no longer have risk. But I will say they all start with risk, but you can lock them down to where they don't have risk. And so just understand at the outset, we can't get rid of the risk at the outset, but we can lock it down over time. And we're going to show you that here tonight. It's going to be awesome. One thing, the first thing that people do when they join the Cash Flow Academy to learn this stuff, and this is a little bit of requirement stuff at the beginning, is I do not teach people that don't have an investor temperament. I don't like people who are rash. I don't like to teach students who are Johnny-come-latelys. So the first commitment that everyone makes when they come into the Cash Flow Academy is there's a 42-minute and 31-second video that is required about the realities of investing, to understand the temperament, to understand risk, to walk in with your eyes wide open. It has a lot to do with this type of stuff, but I spent the first class before you can take any course is this, when there is a 10-question quiz that you must get 100% on before you're allowed in your next class. I'm going to put your hands down, and that's the first commitment you make tonight, is that if you want to learn from me at some point, that you're okay with, before you get to the goodies, so to speak, that you go through my realities of investing class and you get your head on straight and understand risk. Raise your hands if you would be willing to take, or excited to take, realities of investing before you got going. Please, hands up. And I won't be able to check everybody, so it's on our system. I do see Adam Hein with his hand up first, so that's good. And Abdul and Abel, and fantastic. So with that, let's look at our situation right here. Very, very poignant. I have seen some of my friends do extremely well. I have seen others of my friends who my heart is broken over the past 72 hours. This is real stuff. Those of you that are in the United States, I get a little emotional. I think about the people we have in Germany and Italy and everyone around the world here tonight, because the United States is starting to get a taste of what you've been through. And the rest of the world, it's coming. And the situation is very simple. We have a market crash. That's what we have. Absolutely no one on this planet knows what direction this market's going to go tomorrow. Not one person. If they tell you that they know that, they are not telling you the truth. If we go to a daily chart right here on this, and we look at just the last week or whatever, we have up, down, 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 up, down, up, down, up, down, up, down, up. We do not know where this is going to go. That is the reality of the situation. I don't know where it's going to go. Nobody knows what it's going to go. And anyone that tells you they think they know where this is going tomorrow, they are smoking Colorado grade marijuana, and they're up in the night, and they're not telling the truth. More importantly, no one on this planet knows where the bottom will be. This is 2 weeks. We're going to look at this in a minute in context of some other crashes, but nobody knows when the bottom will be. And number 3, nobody, not even me, knows how long this sucker's going to last. That's a hell of a situation. And then finally, this uncertainty will fuel fear. This is called the VIX. If you're taking notes, you write this down. First note, this is called the VIX. This is called the volatility index. This is also known as the fear gauge. If I bring in some time here, right, and let's just do, let's do a bunch of time. Let's see how long this will go. We'll just go with the max available weekly on this. Okay, this is like back in the meltdown of 2007, 2008. That's how scared we were in 2000, 2008, at the peak of the crash, at the worst part of the crash. We're 2 weeks in to this. We're 2 weeks in, and we're already approaching record fear of all freaking time forever. You'll notice these don't last too long, but this is the biggest fear spike that I have seen in my entire investing career. So, the fear of not knowing these 3 things is fueling, the uncertainty is what's fueling the fear. If we knew more about this, we'd say, well, we've had this happen before, or, it's a market, the Fed, blah, blah, blah. We don't know what's going to happen. What I'm going to do tonight for you is the same blessing that I'm teaching my sons, is how to exist in a world of unknowns. Not freak out, but exist calmly, smart, deliberate in a world of unknowns. That's an incredible gift. So with that, we're going to start with the first 2 things we're going to do tonight is we're going to talk about the 2 opportunities that we've been seizing. The first is a lot of what I do personally is Warren Buffett type stuff, where I try to model him, where I'm looking to buy businesses, not stocks. This is very important to listen to, okay? Write this down. Investors buy businesses, they don't buy stocks. Write it down. Investors buy businesses, they don't buy stocks. These are opportunities I'm seizing to build wealth for my family in the long term, for tomorrow. And it begins with not a short-term faith, but a long-term faith that people someday are going to start drinking Coca-Cola again, and that people are going to put Heinz ketchup on their hot dogs again, and that when this thing's over, someday we're going to get on a plane, we're going to go to Hawaii on Delta Airlines first freaking class and sit on the beach with an umbrella in it, that we're going to buy Apple computers. So the first thing I'm going to ask of this group, see how smart you are, see how calm you can be, is, look, I don't know where the direction the market's going to go tomorrow. And I don't know where the bottom's going to be, and I don't know how long this will last, but do you think there is at least a possibility that someday we'll get a bounce out of this, we'll find a bottom to this, and that these companies will be able to service once again, that they are businesses that will be around? Put your hands up if you think it's not the end of the world, we're just in for a rough one for a few months or a year or whatever it might be. Okay, very good. So those of you that believe in business, you're going to learn about three things. Write it down right now. Cost basis. The cost at which we purchase these is a big deal. And the problem you have is you know that some of these are on sale. Hey, Delta is pretty darn low right now. But the problem you have is you don't know if this is the bottom or just the beginning. That's the problem you have, right? Coca-Cola, down. Kraft Heinz, not down too bad. Banks, down. Finding the bottom is tough, but we're going to talk about cost basis. I'm going to show you what I've done with even some of the companies on this list where we're in a very, very powerful position. The next thing we care about as business is, do these have the potential to earn some money again? Do they have the potential to grow once again? We'll talk about it. Now, we're also going to show a ton of examples of where we're trading. And this is, investors, it takes money to buy this, and, you got to buy shares. Where do you get the money to buy the shares? Well, some people trade their way into investing. And I'm going to show you some home run opportunities, just crushing the baseball to generate cash in this environment, like right now, with not, the huge Warren Buffett, bank account. This is for cash right now, and this is taking, the situation and taking what the defense gives you right here. This has nothing to do with these companies as a business, absolutely nothing to do with them as a business. This has to do with their share price. Cost basis and share price are not the same. Write that down. Cost basis and share price, that's not the same thing. Write that down. We're going to have a conversation about time decay. That scares me because some of you don't know it. Volatility scares me. Some of you don't know it. Some people call this delta, theta, and vega. Put that on your list of stuff to learn. If you don't know delta, you don't know vega, you don't know theta, you put that on your list to learn. We'll get to it tonight. We'll get a little bit to it tonight. So, I'm going to show you Warren Buffett's cost basis, and we're going to make this as simple as I possibly know how to make it, okay? The first thing I'm going to draw right here is I'm going to go to a black pen, and I'm going to draw a machine that looks just like this. See my machine? It's a little box like this. It's got a hand crank on it. And when you turn the hand crank like this, money comes out. And that's a business. You understand? That's a business. If it might, this thing might look like a hotel. You do whatever the hotel does, you have guests, boom, money comes out. This might look like, Kraft Heinz. You sell a bottle of ketchup and boom, you got money right here. This might look like someone's RV park. People come in on their campground, boom, money comes out. So does everybody understand that from the high level, just by raise a hand, that all we're looking at here as a business is when they do whatever they do, they earn money. That's what we're talking about. Everyone raise their hand if you get that. Because if you don't get that, we can't go on very much further, okay? That is it, okay? That it cranks it out. Now, there is, when Warren Buffett bought these businesses, there was a price tag on this box. Okay, so let's say this box is Coca-Cola right here. His cost basis, he bought this in two ways. A, he bought this when the price was low. Believe it or not, he bought his cost basis on Coca-Cola. The vast, vast majority of shares is $3.25. And that thing cranks out what's called a dividend of $1.60 right now. Now, let's just think about this for a minute. How many of you would love to buy something right now that if you paid that price and it cranked that out every year for you for the rest of your life, you'd want to buy as many shares as that as you could? Hands up on that, please. Looks like we've got a pretty smart group right here, okay? So the reason Warren Buffett, cares about this is that he paid $3.25 for it, but he's getting $1.60 for it. Now, understand that at that point, Warren Buffett is buying a business, not a stock. He doesn't care what the stock price is today. If it was $100, he's not going to sell it. Why? Because he paid $3, gets $1.60. He's getting 50% on his original investment, 50% on his money, year in, year out, year in, year out. That stock could go to 60, a stock could go to 30, it could go to 100, it could go to 20, it could go to 10. Do you see how the attitude of buying a business, that if you understand that, look, your cost basis is the thing. The lower the cost basis, the better it is. And you're simply buying a business that shares this profit with you in the form of what's called a dividend. Please raise your hands and maybe give them a little click and flash it if you understand that right there, right? We all flash our hands up there. Give me the high five. Ann's got her up. Ann Hedrick's like first. And so that's what a business is. Now watch this. There's another business here. And we're going to draw another box, okay? Just like that one. And it does whatever it does. And let's just say that this one is called Delta Airlines. And when it does whatever it's supposed to and flies the friendly skies, it earns money. And right here, it says it gives the same amount. It gives the same $1.60 every year. But here's a big difference. Warren Buffett's cost basis, and remember this, Warren Buffett didn't get this one as cheap. He didn't buy it until 4 years ago. He bought this one back in 85. He didn't buy this one. And so he spent $44 to buy this little box. And he bought a lot of shares of this thing, $44 to get that $1.60. But what people don't know is there are awesome tricks we can use to drive that price lower. I'm going to show you what some of them are. I'm going to show you how he did it on Coke. But the point is he does not care that he does not care today at all that Delta Airlines is on sale for $35. He doesn't care because he cares what he paid for it. Now, please understand this, and please, please, please pay attention to this. Because it's a big, big deal. In fact, I'm going to take a picture of this so I don't lose it, because that's a pretty important picture right there. So I'm going to take a picture of that baby. Now that's nice and big there. See, that's Andy Tanner size right there, baby. So let's wipe that clean. So we got this going. Now watch. Let me go back a slide, if I may. He owns a furniture store in my local neighborhood called R.C. Willey as well. How many think that he's probably not put a for sale sign on R.C. Willey and say, hey, I'm going to sell my business for half price because I'm panicking? How many think he probably won't do that? Hands high. He's probably not going to sell his Coke. He's probably not going to sell his Kraft. He's probably not going to sell his Delta or his Apple. He's probably not selling any of that stuff. Because why? Because he doesn't care what the price is. He is buying a business. He is not buying a trade. He's not trying to buy low and sell high. He's buying a business for cash flow. I have some real estate. I have a great friend who, gets me into syndications where they make what we call distributions to all the owners. Same thing here. A dividend is just a distribution to all the owners. So before we move on, this is a main point. What we are looking to do during this downturn is if we have cash, not all of you do, that's fine, it's fine. But those that have cash, the dilemma you have is I want to buy these prices as low as I can get them. And here's my fear. So let's go to Delta Airlines real quick. And let's just see if I can, read a couple minds here about how the fear might go. Let's see. Do I have a chart I can put up here? Let's go to a chart, and let's come out here to Delta Airlines. And here's the problem you have with trying to do this right now. Here is the misery of trying to figure this out. Is you're looking at Delta Airlines right now, and it looks like it's pretty darn cheap at $30, right? It looks pretty darn cheap at $30. Problem is, what if you buy at 30 and it goes to 10? How many can see what I'm saying with that dilemma people have right there? Hands in the air. You think, well, maybe this is the bottom, but shoot, maybe this was the bottom. Maybe people thought this was the bottom. And every time I think I'm getting it on sale, I'm losing money and I'm dropping it down. And I want the lowest cost basis that I can get. I want to get this sucker as low as I can get. Does that make sense to everybody? So that's what we start with here. Well, that's where this comes in. Investors want these assets in their asset column so they can produce income through dividends. That's what these guys want. Are the companies earning money? And I'm going to tell you right now that there's this picture, and this is from my office. I took this picture before it's on my wall. And he says, I'll tell you how to become rich. Close the doors. Be fearful when others are greedy, and be greedy when others are fearful. Now, I don't like the word greed right now because it just doesn't feel right to me, considering how many people are hurting. I saw a guy that went to Costco and bought all this toilet paper. He's out literally on the side of the road selling toilet paper for $30 a roll. That's greedy. That's baloney. That's crap. We don't do that. We want to buy things low, not high, and we want to have good bargains. So instead of saying be fearful when others are greedy and be greedy when people are in fear right now, let's just understand what Warren was saying, but let's use this language. Say, let's be smart right now. Let's not be crazy. Let's not be fearful right now. So if you're an investor, we do not sell right now. We don't sell. I know everyone else is panicking. The reason that Delta Airlines is in free fall right now is because people are selling. And it would be no different than Warren Buffett saying, oh, I'm just going to sell my RC Willys right now. I'm going to sell my Coke. I'm going to run for the hills. No, he is in this thing for a long haul. However, one of the things I believe in doing, he'll ride a lot of this out because, he's too big to throw too much more cash in. He's got a lot of cash, and he will pounce when it's right for him, but we protect what we have. And I'm going to talk to you about how I'm protecting what I have right now, where I'm calm. I mean, it's a walk in the park. And you're going to see here in a minute that when we protect, this is one of the things I teach in my 4 pillars of investing class, okay? That's the first class you will take from me, is my 4 pillars of investing class. You go realities of investing, then the 4 pillars class. And then I'm also going to buy more and protect that as well. And you're going to see that I'm going to show you the prices, and I usually don't give out my own stuff, but I'm going to show you the prices where I'm buying things at. And I'm going to show you how I'm making those decisions. And the reason that I'm calm about this, and the reason that this is going to be really easy for those who understand it, is because I know how to buy, but I also know how to protect. And you're going to see here in a minute that, I'm very interested in Delta. In fact, I'm going to buy some Delta. Now, that's not a recommendation for you. You might be in a different situation, but I'm buying some of these companies right now. And I'm going to tell you the price at which I buy it. And what you're going to see when I do this is you say, my gosh, Andy doesn't need to care about the price right now. He doesn't need to care about it because his cost basis is going to be awesome. Okay, his cost basis is going to be awesome. So here we go. Now watch this. So everyone's saying, okay, great, Andy. I've heard this before. We don't panic and we buy in at low prices. But again, you still don't know where it's going to go. You still don't know where the bottom's going to be. You still don't know how long this will last, and this is certainly still going to fuel fear. So there's one thing that we got to work on right here before we get into some of these specific examples, and we've got to learn what a put option is. Now, how many have ever sold a put option before? Like almost nobody. Okay, now lock in. I got one guy right here. We got Chana Dixon. I'm scrolling through. Okay, we got Daniel DeVillers. We got Daniel Reagan. Okay, and just a smattering of others. Okay, we've got it. Look, learning this needs to be our virus. Learning and education, that's what's got to spread through this group tonight. So first, we got to learn what a put option is. Now watch this. This guy right here is in fear. And he is scared that the price of Coca-Cola is going to go down. He's nervous that it's going to go down. And what's another choice, or what's another word for choice that starts with an O? What's another word for choice that starts with an O? And he says, look, right now, this is trading at $39. That's where it is right now, this Coca-Cola that I have. I'm afraid that it's going to go down and down and down and down. So I want to draw a line in the sand at $35. And I want the choice to be able to sell my stock at $35, even if this company goes bankrupt. Now, I'm going to repeat myself again, so everyone gets this. This guy owns some Coca-Cola shares. It's up here at 39 right now. All of a sudden, he's scared to death of a panic or whatever may happen, and he's scared this is going to fall down. He says, look, I don't want to lose more than $4. I can stomach a $4 loss, but I would like the option to be able to sell this to somebody at $35 a share. Okay, now I went through that twice. So we got to, now this is where participation is important. How many understand where this guy's coming from when I say that he says, gee, it's at 39 today. I'm scared it's going to tank. I would like to be able to sell this at 35, even if it went bankrupt. I'd like to have an insurance policy that if I want to, I can get this sold at 35, even if the stock is clear down here. Please raise your hands if you grasp that in just the slightest way. Don't have to have it mastered yet, but in the slightest way. Please raise your hands if you grasp that idea. Everybody got it? Okay, fantastic. Great, great job. This is like an insurance policy. Now think about this for a minute. Do you insure your home? Yes, you do. Now, do you know, catch this, do you know whether your house is going to burn down today or tomorrow? Do you know if there might be a fire? Can you tell me what day it may catch fire, may not? You have no idea whether or not your house is going to catch fire. And if you didn't know, and certainly might fuel that fire. But guess what? Guess what? If you have the choice to sell your house at a certain price, no matter if it burns down or no, you sleep at night. You're calm. So this guy right here says, I just want someone to buy this for me. Now, he's in fear. He's scared. He's a little chicken bok, pluck, pluck, pluck. And he's scared it'll go down. Well, guess what? Warren Buffett's an investor. And he looks at Coca-Cola and he says, hey, it's $39 a share. If you're willing to sell it to me $4 cheaper, I'll take it. I'll take that any day. This is a match made of heaven. He wants to what? Buy at 35, and he will live happily with any price that goes down below that. He'll be okay with that because he thinks long-term it'll go up. So he says, I would love to buy this from you, but he's not going to do that for free. Now, this is very important to catch, so lock in. Lock in. He says, how much will you give me? And the market will dictate what the insurance is. And right now on this trade, this was back in 1993. This is not new. This has been going on for decades. Is Buffett, he says, I will give you $1.50 for every share you'll promise to buy for me at 35. And so watch this. Watch this. This guy on this side is doing this because he is fearful, right? Buffett is doing this on this side to bring in cash. Immediate cash. The stock doesn't need to move. Nothing needs to happen. It's a handshake, for crying out loud. It's a click of a mouse that simply by promising to buy this guy's shares if it goes down to 35 or lower, he collects $1.50 premium. Now, pause for a moment. Pause for a moment and think about this. The bond market in the United States is hilarious right now. Right now, a 10-year bond will give you less than 1% on your money in a year. Less than 1% on your money a year. By raise of hand again, how many understand that a person that buys a 10-year U.S. Treasury gets less than 1% a year? It's been down as low as 0.65%. Do you understand that? So watch this. Warren Buffett has $35 over here. He's got $35 in his asset column ready to buy stock, okay, in his asset column. No liabilities here, income and expenses. He's got $35 in his asset column. Now watch this. $1.50, right, divided by $35 is 4% for about 2 months is how long this was. A month to 2 months. That's 4%. If you times that by 6 times, two a month, that's 25% on his money that is sitting here. 25% on his money that is sitting here in the bank. How many would rather get 25% on your money in the bank by promising to buy stuff you wanted to buy anyway, lower than it is today? Please raise your hands if you have the slightest grasp of what Warren Buffett's doing right here. It's incredible return, an incredible annualized return. Now, here's the best part. I said that no one knows where the market's going to go for sure. So watch this. It might go up. That's a possibility. It might. It might meander sideways. That's a possibility. Or it might tank down huge even further. That's a possibility. Warren Buffett does not know in the next 2 months where it's going to go. He doesn't know that in the next 2 months, but he does believe over the next decade and years that it's going to be up high somewhere, that it's a good company and it's going to be up high. How many understand that, by raise of hand, please, that Warren Buffett doesn't know if it's going to go up, he doesn't know if it's going to go sideways, and he doesn't know if it's going to go down, but he is very, very happy to buy this at 35 because he's buying a business, not a stock. Do you understand that? Now, here is the kicker, and you have to get this, work as hard as you can, because to understand the trades I'm about to show, this is an important part of tonight's class. Look, we're in a hell of a mess right here. It's not okay to be lazy. It's not okay to say, well, this is just too hard for me. If you don't understand it, say, look, this is on my to-do list to learn. If you don't understand this right now, then you write down, I will learn about put options. That's what my coach said to do. Now watch this. Buffett said, how many shares do I want to do this with? It's a liquid market. And so look at this. He says, I want to do this on 5 million shares. That means he's got a lot of money down here, right? A lot of money in here. That means that $1.50 times 5 million, watch this, by making a promise that he'll turn this cash into Coca-Cola stock, that's $7.5 million before the stock moves. An income of $7.5 million before the stock moves. How many like the idea of collecting cash, bringing in cash, $7.5 million before the stock even moves up front? Do you like that idea? Now, pay attention. Pay attention. Right here, if the stock goes up, let's say it goes up to 43, 44. Well, he doesn't have to sell at 35. It's his choice. And he says, you know what? I spent $1.50 to sleep at night. I'm okay. The same way you spend insurance on your home, if it doesn't burn down, the insurance company still collects your premium. So if the value of your house goes up, you still collect your insurance premium. Well, guess what? If the value of this stock goes up, Warren Buffett still collects the premium. So if it goes up, he keeps $7.5 million. Now, don't tell your friends about this because they'll think you're not telling the truth. And by the way, if your friends were really smart and honest and genuine about getting better, where would they be tonight? They'd be here with us. They wouldn't be off watching Netflix under quarantine, spending money when they could be watching this, making money. Now, so much for the people that aren't honest about wanting to get better. Now watch this. Let's say it stays at $39. Let's say it just stays right there. Well, again, he's not going to sell it at $35 if it's just meandering. Yeah, it cost him $1.50 of insurance, but you know what? That's better than losing all your money if it went down. He says, hey, cost of doing business, I'll take $1.50 hit if I feel good about this, that I can always unload it. I can sleep at night. So you're selling people peace of mind. Now watch this. He still keeps the $7.5 million. So if it goes up, he keeps the $7.5 million. If it goes sideways, he keeps the $7.5 million. Now remember, does anyone know where this is going to go? No. But now, does anyone really care where this is going to go? No. Now, this is incredible. And this is what the opportunity is for me, I believe. And if you want to learn how to do it, great. Let's say the stock goes down below 35. He still keeps the 7.5 million, plus he gets to turn this cash into Coca-Cola shares. And does he care about the price, or does he care about the $35 what? Cost basis. But watch, it's not a $35 cost basis. I said that there are two ways to get a low cost basis. Number one is buy low, right? Now watch this. Number two is to use a little investor trick. And this is the investor trick. Remember this $1.50? He got that up front. So when he buys this at 35, he's really getting it at $33.50. His cost basis is going down. Now watch this. Let's say it goes up. He's got $1.50. He can do it again the next month and take it down another $1.50. So now he's going to be in at $30.50, right? And he takes it down. And so every month it goes up, he pockets this month after month. Every month that goes sideways, he pockets this month after month. And when it finally drops down, he might have collected this $1.50 10 times. And he gets to apply that towards what? The cost basis, ladies and gentlemen. Now, the challenge of this class is always that there's so much to learn. It's always the same thing. And I can teach this to you over time and make it simple. I really can. But your job is to catch the big picture. So there's two things to understand here. First of all, how can you see in this particular trade that Buffett's going to make 7.5 million up, down, or sideways? Do you see that? That it doesn't matter which way the stock goes now. Can you further see that if it does go down, he gets to buy it at a lower price and apply whatever premium he's collected towards that cost to lower his cost basis? Please raise your hands if you can grasp those two major concepts. And so we sell options to generate income and reduce cost basis, but we buy options to protect assets such as insurance. So someone say, okay, but Andy, great, but still, what do I buy and when? Well, the way you decide what to buy is by understanding this. Write this down, the 4 pillars of investing. The very first class, when someone says, Andy, I'm serious, I want to learn this, I put them in my 4 pillars of investing class: fundamental analysis, technical analysis, cash flow positions, and risk management. It takes a while to learn this. This is understanding how strong the company is. This is understanding how to read the chart. This is how to collect the cash, and this is how to manage the risk. So I'm going to start now that you understand a little bit about what Buffett did, I'm going to start with the first example tonight. We're doing pretty good on time. You guys have done a great job. We're going to start with the first example, and we're going to go back in time a little bit, okay? We're going to go back in time just a little bit. And let me detach this so I can get a nice clean chart here. And I'm going to go back before the virus got, really, really nasty globally, and we're going to look at oil. Because before I was, fooling around with all this other stuff, hey, I'm just doing my normal thing, right? I'm just hanging out. I'm just doing my normal stuff. And I'm just, looking to do some oil. Now, let's bring in a lot of history on oil right here. In fact, let's bring in as much as we can on this time frame. I don't know how much it'll let me bring in here. But there we go. Okay, this is a good looking chart right here of oil. And I'm going to draw a line. I'm going to bring my drawing tool back. And I'm going to draw a line right here in, let's put it in light blue. And I'll draw it as straight as I can. Okay, I'm going to draw it as straight as I can. Okay, about as straight as I can, right around in here. Okay, now look at this point in 05 right here. Oil back here in, 1983, 1984, 1985, oil up in from 85 to 2005, for that 20-year period, oil is hitting its ceiling, and it's hitting what we call resistance at $40 a barrel. Does everybody see that? Yes. I can't hear you, but if you say it loud enough, I might get a sense you said yes. And then you'll notice that there's support at $40 a barrel until today, till now, where every time it touches this, it went ouch and went down, ouch, went down. But every time it went here, it went up, right? It goes up. So before I knew the oil was going to be in trouble, I knew that the Russians and OPEC were fighting over a supply war, and I didn't see it was going to go down like this. I did not see it. I did not know that it was going to look like this. In fact, I'm trading it about right here where it's at $65 a barrel. I can't see this future yet. I'm right here. I'm like, looking here, and I'm watching this, and I see it starting to go down. And before it sinks down, I think to myself, $40 a barrel, that's probably the floor of oil. It does, it's gotten down in the 30s a couple times, but it hasn't lasted long. And so I think ExxonMobil. And I say, now watch this on ExxonMobil. Interesting chart we're going to see here. Okay, notice this. I'm going to draw my green line again. Okay, 2005. Before 2005, after 2005. Here's the surge above. And then I look at this and I say, this is called technical analysis. This is the second pillar of investing. I look at that line, and this line, not knowing it would drop below. I didn't know it was going to drop below. And I'm looking at this, and I'm looking at $55, and not knowing that this was going to go down. If you were looking at it right here, and you say, well, I don't know if it's going to go down, you're probably saying, I want to buy around 55. Okay, if you didn't know the future, let's go back, and I'll show you what it really feels like. If you're flying blind and you can't see the future, and let's go back maybe, let's go for like 4 years, daily chart, something like that. And if the chart looks like this, see if I can advance it at all, it might not let me. If the chart were to look like this, I can't tell that it's going to get down into the 40s or the 30s. I can't tell that. I'm thinking, 55 is my price. And so what I did is I did exactly what I talked about Warren Buffett doing. I did exactly the same thing. As I said, look, here is Andy. Watch this. Here is Andy. And I found a guy that was scared oil would go down. And he said, I want the choice to sell, watch this, ExxonMobil at 55 a share. And I said, shoot, it's at 60 right now. It's like at 65 right now. And I said, I will make you a promise. Watch this. I'll make you a promise, and I will buy your stuff at $55 a barrel. I'll buy that ExxonMobil at 55. Now, I didn't know it was going to go much lower than that. That's why this is going to be really powerful for you to understand it. And this is only like a 3-week deal. It's very short, 2 to 3 weeks. But I took about 55 cents or so for that. Now, I like to buy new positions in about lots of 500 shares to 1,000 shares, and I'll build it from there. So a lot of you don't go that big. Some of you go smaller. Some of you might go bigger. I don't like to go too big. So I said, look, I want to buy 500 shares of ExxonMobil. Well, how much cash do I have to do that? Now, not everybody's got a bunch of cash in their pocket, but let's look at this. $55 a share times 500 shares means I got to have $27,500 in my account. Now, think about that. That's like, a house. Someone puts down that on a rental house or something like that. So that's a little bit of money, I know. So let's just call it 27.5K in here. That's my cash. And I says, I want to get paid an income of 55 cents. Now watch this. I got 55 cents, okay? 55 cents divided by the $55 share price. That's about 1% on my money in 2 weeks. Annualize that. That's my rate of return. That's my rate of return annualized on this instead of it. Almost the same about as Warren Buffett's is. Almost the same. Incredible. So I'm going to bring in this money. I'm going to bring in a measly, it's very tiny. I'm going to bring in a measly 55 cents times 500 shares. So I'm going to bring in a measly $275. But you know what? That's pretty good if you had a rental house where you're not using any debt. Put 20 grand down on a rental house and you get $275 in rent with nothing to pay. So that's nice. And that's in 2 weeks. Okay. Money in 2 weeks. Now, so I get that money. Now watch what happens. I'm committed now at a buy price of 55. Now this is one of the number one things I invited you to see tonight. Notice that this thing is getting its butt kicked, okay? Absolutely getting destroyed here. And what I'm going to try to do, if I can, is get my mouse going here. If it will let me. I don't know if it'll even let me. Let me try again. I'll try a different chart. Okay, this thing absolutely is getting its butt kicked. We didn't know that OPEC was going to get going to get killed with oil. We didn't know that. Now I've lost my mouse. It's not letting me move anything. Hang on, give me a minute. Technical difficulty. Unbelievable. Got to quit my charts and bring them back up because my mouse froze. There we go. Give me just a second. So I didn't know that oil was going to get its butt kicked. Okay, I had no idea that we were going to have coronavirus. I had no idea. Get this going, FOUR, and get the password in so we can reset it. Thank you for your patience. Okay, it's coming up. I had no idea it was going to tank. I had no idea the planes were going to be cut. I had no idea we wouldn't be doing jet fuel. I didn't know that the Russians and OPEC would get into a bidding war at this time. I didn't know any of that stuff. Didn't know any of it. It's still not letting me move it very well. I had no idea that it was going to fall down this far, and I don't know how far else it's going to go. But what I did is, since I know, now please catch this, since I absolutely know that my buy price is 55 minus 55 cents, so it's like 54 something, right? I decided to buy a put option at 55, right here. At 55 is where I bought it, okay? I know I'm going to buy the oil at 55, right about here, and I know it's tanking clear down here, ExxonMobil, it's around 35. Now watch this. So I bought a put option. Now this is called an options chain. Please understand this. So I'm going to have two things on Friday. Number one, I'm going to have two investments right now, and this is so critical to understand. The first investment that I'm going to have on Friday, the first one in my asset column, is I'm going to have 500 shares of ExxonMobil that I didn't have before. I did not have a position in this. And I'm going to pay $27,000 for it. I'm going to pay full price, just like I promised to do. And I got 500 shares on ExxonMobil. But I also have put options for every single share. I have put options. In other words, I have insurance. Now, please lock in. I know it's a lot to take in. I know it's a lot to learn. I know it. But please lock in, because if you catch this, your whole investing world is about to change. This is called an option chain. Over here, these put options. And you're going to notice something, that the price of ExxonMobil today is a lot lower than the price I promised to pay for it, a lot lower. As a matter of fact, the price of ExxonMobil today is clear down about $36.81 right here. So think about this. If I'm buying it at 55 and it's down here at 36, I'll round it up. Let's just call that around and call it a $19 loss. Is that fair enough to say? And I've lost $19 times 500 shares. Are you out of your mind? I mean, that's what it looks like to get your butt kicked. But I also have these put options. Now watch this. I bought these put options for about $5, which means that I can sell this at my buy price if I want. Now watch this. These are separate investments. There's the stock investment over here that is tanked and cost me $19. But watch this. I have put options that I bought for $5. I have the right to sell 500 shares to some other dude at 55. I can sell it at 55. So the value of this put option today is $18.80. $18.80. I'm down about 19, but I'm up $18.80, almost the full $19. Cost me $5 to do that. What that means is now is that I don't need to actually sell my shares. I can keep my shares, all 500 shares, and I can keep it at that $36 price, but I have been compensated for my entire loss. And look at this, my new cost basis right now, if I choose to, is at $36, and I haven't lost any money. I have lost $5 to insure it. If this stock goes to 20, my cost basis will be 20 plus 5 because I have this put. This will keep growing in value. The further down this goes, it can go down to $1, and I will not lose a dime between whatever I paid for it and wherever it goes. Wherever this goes, however low it goes, I don't know what that will be. I don't care, because however low this goes, I have insurance till June on this. Lots of time, plenty of time. I can watch this thing disintegrate till the 19th day of June, 2020, right there. And I can still buy this at 55 or sell this. I could buy it, whatever the market is, sell it at 55. So my intrinsic value that I can sell that option for will continue to increase at the same pace the market drops. Now, I know that's hard to understand for someone who's brand new. I know it's hard to understand. So you must communicate with me now. How many understand that I got paid to buy this to lower my cost basis? Then I bought insurance that will compensate me for every dime that this falls, and then my new cost basis will be as low as it chooses to go. How many like this idea? Raise your hand. So I can sit. This is so important for you guys to get. I can sit on my butt right now, and I can actually cheer this on. The lower, the better. The lower, the better, because I can sell at 55 anytime I want, which was my buy price. And because that contract lets me buy it however low it goes and sell it at my own price, my new cost basis will be whatever it goes. Now watch this and how huge this is to understand. If you can just have the trust to understand how big this is. I do not know. Watch this. I do not know what direction ExxonMobil will go tomorrow. It's probably not going to go to 140 though. I don't know where the bottom will be, and I don't know how long this will last, but I will tell you this, I have absolutely no fear of this going down, because if it goes down, my cost basis will be lower than I ever dreamed of. I don't have any fear of it climbing back up because I can own it at 55 and sell my insurance back. And so I really am in a position now that's, I wouldn't call it bulletproof, but it's pretty darn close because I don't have to worry if it goes down, that'll be good for me. If it stays there, I'd love to have a cost basis of 33. And if it goes up higher, I love to have I liked it at 55 in the first place. So how many understand that while I don't know which directions they're going to go, I don't need to know because I've used options and financial education to get the lower cost basis than I ever dreamed of. Please raise your hands if you like this and if you would like to have these skills over the next 2 months. Please raise your hands if you like this. It's absolutely awesome. If you like this, in the question box, put "this is awesome" so I can see you write it. I want to see how many "this is awesome" I get in the question box. Just type it in. Fantastic. Absolutely fantastic. Is this life-changing? If you think this is life-changing, type in "this is life-changing." What's crazy is my first financial education class, I only paid like $2,000 for it, right? I only paid like $2,000 for it. These options are worth just on this one trade, these options are worth thousands and thousands and thousands and thousands of dollars to me. One trade, one skill, knowing how to do it. I will go to bed tonight and I won't look at ExxonMobil. And I will get up in the morning, I won't even look at ExxonMobil. Why? Because I have this locked in as however far down this goes is my new cost basis, and I'll get paid dollar per dollar every time it goes down. The delta in this thing's almost 1. And so, here's the thing. This is the type of stuff this is why I'm here, is to show people how to do this. They're not doing this in the 401k, and they could. They're not doing this in their accounts, and they could. They could be seizing opportunity. They're not. Delta Airlines. I saw Delta Airlines about right here, seeing Corona. I thought, man, this is trouble. This is trouble. This only last week, okay? This is freaking trouble. Guess what I did? I said, what price would I like to go? And understand, I did not know it was going to go down here. It was about right here. And I said, what price do I think would be good at? Well, I'll tell you what price I think I would like Delta at. Warren Buffett paid 44 for it. Now, check out these dividends. Check out the bonus money. Dividend.com. Check this out. I'm going to go ExxonMobil first. OXM. Now, for crying out loud, a U.S. savings bond, 10-year bond, a U.S. Treasury bond, 10-year bond is paying 0.5% to 1% right now in this market. ExxonMobil right now at this low price, if I get it at 36 and that's my new cost basis, my dividend on this is 10% a year. Plus, I can keep writing options and keep lowering my cost basis on this, like I'm going to show you in just a bit. That's opportunity, ladies and gentlemen. Warren Buffett's, he didn't pay what I paid. Watch this. Delta Airlines. Watch this. DAL. Delta Airlines dividend right now is 4.5. Okay. Warren Buffett's, he's 3.6 because he paid 44. I might get this for 35, 31. You have the chance to get a better cost basis on Delta than Warren Buffett. Now, let me tell you why I like Delta. And I'm not making a recommendation. I'm just showing you education-wise why I chose it instead of Southwest. Before this thing happened, they had an investment-grade balance sheet. In other words, when I took my 4 pillars of investing and I looked at, United Airlines, and I looked at Southwest Airlines, and I looked at all these airlines, they had the best and strongest balance sheet, investment freaking grade. Then I went to technical analysis, which is how to read the chart, and I saw this little support down there. I says, if you could have bought it anywhere on this chart over the past 5 years, where would you have bought it? Well, if it had been me and I could choose my price, I'd have said I'd have bought it right there. I'd have bought it at about $35 a share. That's where I'd have bought it. So I made a promise to buy it at $35, just like we've been talking about. I made that promise about a week and a half ago. I said, you know what? If that thing gets down to 35 and someone wants me to buy it off them, I'll do it. I'll do it. Well, I got paid about, again, 55 cents to do that. So check this out. 55 cents divided by the $35 for the stock, that's 1.5%. That's in 2 weeks. Even if that was just per month, the money in my account would be compounding at 18% a year, for crying out loud. And that's if it goes up, and that's if it goes sideways, and that's if it goes down a little. Just like Warren Buffett and Coke. If it goes up, I'm making 18% on my cash and per annum, annualized in that month. If it goes sideways, 18% of the cash. If it goes down, 8% of the cash. And if it goes down to 35 or lower, well, guess what? I can buy it. Well, it went down a little lower than that. So guess what I did? Did the same thing I did with ExxonMobil. I have puts at 31. And if this thing goes down, I'll get paid good deltas, get paid. No matter how far down this goes, that will be my new cost basis if it goes down. If it goes up high, hey, I lost $5 buying insurance. Big deal. I mean, $5 here or there with a $65 to $30 move, and I'm going to worry about $5 of insurance. I'm buying that insurance every time. So again, if this is life-changing, type it in. Say, Andy, this would change my life. Write it in. Tell the truth. Would this change your life? Incredible stuff. Incredible stuff. We're in about an hour now. How many of you are glad you came here? How many are glad you came here? We've been in 1 hour. 1 hour. Let's keep going. Keep focused. Keep rolling. I'm telling you, this time is why the Cash Flow Academy was founded. It's for times like this where the financial education. I got another 500 shares here I'm going to pick up. And I'm going to pick it up at a cost basis, most likely with Warren Buffett. Why? Because I have these puts. I'm protected on the downside. If it goes up, great. I lose a couple bucks, but I'm going to buy this at 35, baby. And I'm committed to buy it on Friday. And if it keeps going down, I got insurance. If it goes back up, great. I lost a lot of insurance, but I get the gains and I get the dividend and I'll write the options. So right now we're talking about investing. I'm going to show one more. And before I do this one's special, is I'm going to introduce one of my friends here in just a minute. And we're going to look at one of my favorite companies right now. I love ketchup, is Kraft Heinz. And I've actually got a much larger position in Kraft Heinz than I'm getting in these others. So Kraft Heinz is kind of a big deal right now, okay? And we've got some stuff in here, Mentor Club wise. I got to clean this out. Let's see if I can get this to size up for me nicely. I'm going to have to bring it over to my other chart to do this. Hang on, let's go back. Now let's see if I can get KHC in there again. So one of my good buddies is named Corey Halliday. And this is a picture of Corey. What a handsome guy. You know, Corey, that's a little younger than I think. I think you're cheating on me, Corey. Are you with me, buddy?
I'm here.
Okay, so ladies and gentlemen, type in, hi, Corey, Corey. Hello, Corey. Corey, the world. Hello, world, everyone. Corey. Here's Corey Halliday. Corey, how long have we known each other?
Yeah, almost 20 years, I think. Right at about the year 2001, 2002, something like that is, I think, when we met.
And so you and I have seen these crashes. We've been through this before. Yep. Corey is what is called an options principle. And please just take a moment and explain what an option principle is in the simplest terms you can. And if people don't know what it is, well, we'll help you learn what it is. Go ahead. What is an options principle?
It's a license. So when I worked as a broker, you get a Series 7 license, which is called a General Securities Representative. And then I became the firm's option principal, which is a Series 4 license, and did that for a number of years. And it's all based on risk management and really kind of controlling risks and minimizing risks as much as possible. And you can do that a number of ways, like Andy's talked about, in the options market. And interestingly enough, That's why options were created in the first place, was so that it was a vehicle so that people could manage their risks. And I find it interesting because if you talk to a lot of people about options, their first comment will be something like, oh, that's risky. Where, the average person, they might use the options market in a very risky manner because they don't know what they're doing. But literally, options were created to mitigate risk, to take risk away from you, transfer it to someone else, or to collect premiums and cash flow so that you have less risk in the investments you own. And so the whole purpose of options in the first place is to give us a risk management lever that we can pull at any time to reduce the risk we have in our portfolio.
What an option does is it gives me the choice. What's another word for choice that starts with an O?
Yep,
it's option. And what this option does is I pay this guy a premium like $3 or $5 or whatever it is. And this guy, what's another word for guarantee that starts with a P? He's got to make me a promise, just like you insure your car, just like you insure your life, just like you insure your house. You pay someone a premium. It's very small. And they give you a guaranteed price at which you can sell your stocks. Now, I'm just telling you right now, lock into that idea. If you and I can pay a small amount of money in this market right now to guarantee the price at which we can sell, how many of you would sleep pretty darn good at night in this market, pretty darn good at night, if you knew you had a guarantee to sell at a high price, even if it went down low? Give me an oh yeah in the question box, baby. Give me that oh yeah. It's incredible. Now, what's interesting is Corey is an option principal. You are in charge of a floor of traders at a firm. How many traders are you in charge of to manage the risk on all their trades?
Yeah, I mean, I've done it for hundreds of individuals at a time, and luckily we have teams and whatnot. But a lot of people, a lot of different traders, a lot of different fund managers, things like that.
So we are talking to a guy here that manages the risk for the entire firm on hundreds of trades. Now, I'm a lucky man because I have a great wife, I have great kids, and I'm also a 20-year friend of Corey Halliday. And I'm going to share something with you about my relationship with Corey. Corey, what do you, me, and one other partner do every Monday, 9:30 sharp? What are we doing every Monday?
Yep, we're trading together, trading a joint account between us.
We have money that we've pooled in a business account, and we meet once a week, and we use these strategies I've talked about in real life. In real life. Now, here's an important question that I'll get a yes or no on in the text box. If I were to invite you to that meeting where Corey and I trade each week, how many of you would join me and like to watch Corey and I trade together? Put in the box yes if you'd like to do that. Well, I'm flattered that we have so many yeses. I'm flattered. I got a lot of people. Mary Smith says, I want to. Well, if you think for 1 minute that I'm going to invite you to watch what me and Corey do with our own person, you're smoking marijuana. I just want to see if you want to come. That's a private meeting, folks. That's a private meeting. Now I'm getting some people, oh, boo, boo. Okay. You're not allowed to come to that meeting, but Corey and I trade every day. I'm going to show you a position that Corey and I have been building for a very, very long, long time. And I couldn't even prepare slides for it. We talked about oil futures, Exxon Mobil. Talked about how I'm locking in Delta Airlines at a low cost basis as an investor. I talk about Kraft Heinz now, and we spotted Kraft Heinz. I'm going to show you when this got our attention. Coronavirus did not get us interested in Kraft Heinz, not at all. As a matter of fact, I can't screw those up because it's Noah's trade there, but I'm just going to go back in time about 2 years on a daily chart. I'm going to show you where we got attention on Kraft Heinz. What is the mantra, ladies and gentlemen? Be fearful when people are greedy, but be greedy when people are fearful. This is called a gap. And what happened is Kraft years ago merged with Heinz under Warren Buffett's assistance. And Warren Buffett, get this, his cost basis for this stock way back when it was low. Remember when he bought it low? His cost basis, if I can find my chart, Warren Buffett's cost basis on Kraft Heinz is $30. Okay, it's $30. Remember that. What's it? What is it? It's $30. And remember, the most important thing is cost basis, because the lower your cost basis, the bigger your return on the money machine in the business. So Buffett's only getting 5.33% on this $1.60 that it cranks out. He paid $30 for it. So when this thing fell down to $30, it got my attention. This is way before Corona. This is in 2019 in like February, okay? Like in February. And so Corey and I said, well, why did it go down? Why did it go down? And so we said, well, let's see if there's something wrong with the fundamentals, right, Corey? Let's look at their balance sheet. And what we found is their assets were inflated by what we call brand. They inflated what they thought their brand. In other words, they say, hey, our brand Heinz is worth $20 billion or whatever. And it was full of crap. It wasn't true. And the SEC called them on it, and that's why it gapped down. The SEC says, look, we're going to make you readjust this. And so they had some impeachment costs, and they got their balance sheet right. But remember, do we really care about the balance sheet? What do we care about? Earnings. We want to know if they're earning money, if they have a chance to grow. And the answer to that was they were earning a lot of money. As a matter of fact, not only were they earning money, but if we look at Kraft Heinz dividend, people, I know I'm doing a lot. I know it's hard to keep up, but that thing's down at $23 now. Their dividend is at 7.27% right now. That's better than Warren Buffett is getting, because anyone that buys it now has a cost basis. If Warren Buffett bought at 30, it's at 20 some odd dollars right now, around 20 some odd bucks right now. That's what it's worth. So what Corey and I started to do again was to sell put options to buy it. It's the same thing I've done with these other two trades. We're just going to do it one more time. We're going to do it one more time, but I've got a nice little chart here for you to see what we're doing with this. So, and it's not complete. So here it just fell, and it's in February where it got our attention. And so in March, we sold these puts and we collected $1.22. Remember when Buffett got $1.50 for Coke? Well, we got $1.22. That reduces our cost basis from buying at $32.50 to actually minus $22.80. So watch our cost basis drop. So now if we were to have bought it, we were paid $31.28 for it. So we're getting closer to Warren Buffett's price. We sold another option. I don't have time to teach you about that one, but we brought another 88 cents. So our cost basis went down to $30.40, $2.10 in premium. You'll notice that it did not go below the green line, which we promised to buy at 35. So remember, up we keep the money, sideways keep the money, down we keep the money and own the stock. It didn't go far enough for them to make us buy the stock, but we keep the 210. So what do? Do it again the next month. We sold some calls, another 50 cents. Cost basis down another 50 cents. That's $22.60 off. If we do it, $29.90. We did another put down here. So in other words, we're just promising to buy at the green line. It came down for a bit, but then it came back up. Again, if it goes up, we keep this premium, 52 cents. If it goes sideways, we keep this premium, 52 cents. Add it to the tally on cost basis. Add it to the tally. Next time, we did 71 on a call. We'll explain that another day. We did another 30 cents on a put here. And notice, because of all this premium we're collecting, look at our cost basis fall from March to April to May to June. We kept doing this over and over and over again. And today, we have done this for almost an entire year. We started in March of last year. Now it is March today. Now, this is what's incredible. Corey, we bought that stock on about this dip right there. So let's bring this up big so we can all see it. We wound up buying the stock in August on this dip. We had collected all the premium in March, in April, in May, in June, in July, and in August, It finally got put to us, and then we've been doing the same thing since. What's our cost basis today on Kraft Heinz? What's our cost basis?
Yeah, our cost basis is below $20 per share. So we have literally reduced our cost basis down to the point where we're now at a cost below 20 on the stock. And when you think about it in those terms, if we're able to keep up this pace, this year we could easily have it down to $15 cost, and maybe the following year, $10 cost. And what you'll notice is if we're able to keep chipping away and generating income, eventually we would have zero cost basis. We would literally have an asset that we would have no cost in. We would have cashed out as much income as we had put into it, hopefully within the next few years, and we would still own the stock, and we would still be able to generate cash flow from that stock in the future, which is a really powerful thing. It's kind of like, to use a real estate example, paying off the house and still owning the house. And you can pass that on to your kids and grandkids, and it still generates income from renters and so forth. It's a very similar concept in the financial market. So we've worked at below 20, and the game plan is to just keep going. I think the stock's at $24 or whatnot per share right now, and we'll just keep chipping away over time.
Now, here's why I'm showing you Kraft Heinz, though. Now, watch this. What are people buying in the grocery stores right now? We're getting ready for coronavirus. What are they buying? Kraft Heinz sells Oscar Mayer wieners. Kraft Heinz sells macaroni and cheese. Kraft Heinz sells Philadelphia cream cheese. Kraft Heinz is the fourth largest food company in the United States. Kraft Heinz is the fourth largest food company in the United States. If you look at the S&P 500 and what it's been doing in this market, and then you look at what Kraft Heinz has been doing in this market, how many feel pretty good that even if you got coronavirus, you're still going to want to eat? Put a yes in and say, I'm hungry, I want to buy food. Who wants to buy food in the next 8 weeks? In fact, I had a Oscar Mayer wiener today. You follow? Some people are like, show me how to do this with the toilet paper. That's the big one people are saying. How do I, you could do it with the, Procter & Gamble, you can do this, or no, it's, Noel, help me. Who is
Clorox,
it?
Colgate, and
Palmolive. Kimberly Clark. Noah to the rescue. Kimberly Clark. Again, my first course I took was about $2,000. I spent 1,000 cents. But I'll tell you, that first course is what taught me how to do this stuff. And it's just life-changing. You guys said it. It's life-changing. This is a much happier place. So I have not bought puts on this because my cost basis is already lower than 20. And I might buy some puts and calls on it, keep doing what I'm doing, but all I got to keep doing is what I'm doing. So those trades are about investing. Does everyone understand? We are buying companies. We are investing when the price is low. We are using awesome investor tricks to get our price even lower over time. And then we're buying put options to secure ourselves so we don't need to know how far or how long. We simply have insurance to get our cost basis lower. We're in an hour and 23 minutes. Are you glad you came? Type in yes if you are. We're in an hour 23. We got a little ways to go, guys. I said it was going to be heavy. I said we were going to be throwing punches. Not everyone understands everything perfectly, okay? But it's life-changing. This is why the Cash Flow Academy was created. This is our time, you and I. So, Corey, I'm going to have you back a little bit because I got a lot of people saying they want to join us on Monday. And we're not inviting them, but they want to join us. They're like, let me in. I got one guy. Let me in. Okay? Life-changing stuff. We can look at coronavirus in the freaking face and say, I got insurance. I know how to trade this. I know how to lock things down. And we haven't even gotten started yet because we're going to talk about the Mentor Club. Now, a couple of you guys been cheering Noah in the Mentor Club because you're in it. Some people are not in the Mentor Club. So I'm going to show you some stuff here. Now, watch this. Let me bring up my web browser because I got like 25 screens open over here. I got dividend.com and all this. Okay, This is the Cash Flow Academy. This is our website. Okay, this is where we hang out. And if you go to the Cash Flow Academy, we have different programs for different types of investors, different types of things. So far, the class, it's a $2,000 class. Of course, I'm going to give you some love on that, so don't worry about it. I'm going to give you some love. But the first class is the 4 pillars of investing. And every single solitary thing that I have taught and demonstrated, every single thing is in that 4 pillars class. It takes, depending on how fast you take it, there's about 20 hours of instruction. Now, tell me you have a little empathy for me here. I don't know what we type in on here, but who can appreciate how difficult it has been for me tonight to take all of these concepts and have them make sense in an hour and a half? Who can say, I get it? It's tough, right? And not all of you understood all of it. It's tough. Dwayne Becker's giving Noah some love. He's saying Noah is the man. Well, we got him on deck, ladies and gentlemen. Okay, I understand that it's tough, okay? Flynn Bryan says, 4 pillars is great. Yeah, it's really cool. So it's tough to explain all this. But my talent, I can do 3 things. I'm 6'8" and I can change the light bulb. I can put the star on the tree come December. And those are not great talents. But the one thing I can do, and you ask the people who are on this call, I can make this stuff simple. I can teach this stuff when people want it, when they really want it. So rather than trying to cram through this in 90 minutes, let's stretch this out and spend a couple weeks together. Now, I don't know about you. I'm missing the NCAA tournament. I'm missing my NBA basketball. I'm missing the sports world. I'm missing going out to dinner. I'm missing going out to movies. So basically, when they quarantined us and they told my kids they couldn't go to school, we had a family council. And we said, we can sit on our butts and eat frickin' Heinz ketchup, right? Or we can get off our butts and go to the park and walk and keep our bodies healthy exercising. We can sit on our butts and watch freaking Netflix at $5 a day and watch a movie every day, or we can learn as a family. So we set some learning goals. We said, you know what? The rest of the world might sit on their butt and ride this out and be fearful or whatever, but we're going to use this opportunity, being at home in our house, to learn. How many like that idea? To learn. Are you with me? Say, I'm with you. That's what we're doing. We're doing work. We're learning. So one of the things I tell you, if you want to do, and I'm not a high pressure guy. You guys know me better than that. I'm not a high pressure guy. But I can tell you this. If you put your nose to the grindstone, you can get through this thing. And I always give people lifetime access. So those of you that are already in, the reason I wanted you here tonight is you're like, you know what? I know that put option is taught in the risk pillar of the 4 pillars. I know that protected puts there. Oh, I know selling that put to buy lower is taught in the cash flow section. Oh, I know that fundamentals and all this charts is taught here. You got lifetime access. You're going to sit on your butt, or you're going to go through your 4 pillars and study. It's your time. The knowledge is here. We can get through this thing and come out on the other side stronger, more profitable, and tougher. So that's that. Now, that's the 4 pillars. So let's see this. How many genuinely, now it's a lot, most of you are not in the 4 pillars, so be genuine. How many of you would genuinely like me to throw you some love? It's a $2,000 class, but who would like me to throw you a little love considering the circumstances and make this thing affordable for you? Say, I'm in. Type it in. Say, I'm in. Put it in. Let's see what you got. Beautiful. Beautiful. Great job, Patrick Dowling. Patrick Dowling, way to go. We're all coming in, baby. We're coming in. So that's the first prong. Now, check this out. Noah Davidson, ladies and gentlemen. Let me see if I can find him. I thought I had a picture of him here somewhere. Okay, we'll bring Corey back in a minute. This is called the Mentor Club. And when you click in here, it opens up this simulated account right here. Now, all the trades I've showed you so far are real out of my own account. I'm now going to show you the handsome Noah Davidson down here in the corner. And I put you right in the Mentor Club, Noah. Are you here with me, buddy?
Oh, I'm always with you, Andy.
Corey Halliday is our guy that Noah and I look to for risk management skills. But Noah Davidson is about the best guy you'll ever find. He's the best I know of in what we call trade repair and trade adjustment. And I just want to see if you caught this. In this deal that you've seen so far, how many get the idea that I've been using these options to lock down the market, to create guarantees for myself and promises with income that I'm locking down the market and I'm squeezing it in a frickin' pretzel hold? I've got this thing in a rear naked choke from jiu-jitsu with my hooks in. Those 3 trades I showed you, the market is in my hands. I'm not dying for their hands. I'm not in they're in my hands. You catch that? So you're going to have a little trust in me because, I've done my best in the first 90 minutes to show you how this stuff works. We got about, I told you we were going to go over. It's okay. We made it. But do you get the idea that there's probably more to these options than meets the eye? And if I can lock this down the way I've showed you, I've locked it down as an investor, might we also be able to lock this sucker down even more if we decide to be a trader? Because I'll tell you what, there's cash available right now. And if you remember, when we clicked the button to sell those options, we got the money before the stock moved. And if you can lock down the risk after, we're not interested in just buying companies for when I old and got a long white beard and I give them my kids and we're Warren Buffett. We're also interested in cash today. So if you're interested in cash today, write it down, put it in. I want cash today. Put it in, write it down. Tell me no, I'm going to look. I want cash today. Who wants cash today? Let's see. Who wants it? Oh man, we got a lot of people. Matt Teagan says, I want cash, period, today, period. Taj says, I want cash flow. Taj Hussein, I want cash today. So we're gonna open up the Mentor Club, and this is what it looks like. Now, just hold your horses for a minute. Right here is a picture of the Mentor Club, and notice that we teach you risk-free. We teach you how. We get you in the startup boot camp, and we get you simulated trading, and we get you in a simulation. So you do this with no risk. Our goal, you can get big numbers here, but our goal in the Mentor Club, Noah, is we want to show people make about about $1,000 a week, $4,000 to $5,000 a month. So this profit, since we opened the trades, is not supposed to be $25,222.17. It's not supposed to be that big. So don't think it's going to be that big because we're just trying to show basic trades. I don't like getting out of control. And you'll see that we have a loser, and 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 there's a big loser, and a loser, and some of these we're holding. These are core positions, so they're okay if they go down, and a loser. So it's important not only to show the winners, but the losers. Winner, winner, chicken dinner, winner, 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 winner. That one's kind of nice. Winner, 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 winner. So we show both our wins and our losses, and Noah has been working his butt off in the last 4 days to take advantage of some of this stuff. So I'm going to pull off his handsome picture, and I'm actually going to bring up the real Mentor Club right here. This is the real one, and we're just going to go with one chart right here. We're going to go chart by chart. We're going to show you some trades, and we're going to introduce something called the risk graph, okay, the risk profile. And what a risk profile is let's say I got Tesla in here, okay, and let's say I decide I want to buy some Tesla. I'm going to bring up a risk graph. You're going to notice this. Now, if you don't understand what a risk graph is, that's okay, but we're going to do our best. On this side is if I make money or lose money. See, plus 10,000, plus 20,000, plus 30,000. On this side is if I lose money, minus 10,000, minus 20,000. Here's the price of the stock. So I have Tesla up here for an example. If we were to buy Tesla today and it would go up, see the number rise, $3,000, $4,000, $5,000, $6,000. If we were to buy 100 shares of Tesla and it went up, we'd be making bank, $3,000, $4,000, $5,000, $6,000, right? if we were to buy it in this market thinking we hit a bottom, maybe we think, oh, here's the bottom, but I'm wrong, we're losing 2,000, 3,000, 4,000, 5,000. So just give me a yes in the box. Just type in a yes if you kind of grasp the basic idea behind this risk graph, that this shows me how much I make or how much I lose at a given price. Okay, just say, I got it. Got it. Pretty simple, pretty easy. I got to scroll through 1,000 people here to see this. Got it. Okay, great. Now, these risk graphs get pretty funky because Noah's a stud. If I short this stock, it flips. That means that if I think Tesla is going to go down, and it does, I'm making money if the price falls, and I'm losing money if the price rises. And this is the damnable misery of trying to trade this market. And I'll tell you why. Because no one knows the direction. No one knows when the bottom will be. No one knows if it'll last, and it's uncertainty fuels the fear. So you're always guessing if you're going to get in and lose or get in and make. And so we're going to use some options and some risk graphs here, and we're going to show you some phenomenal trades. Now, let's see if everyone gets this right. We're going to take a poll. We're going to play a game. I'm going to give you the company, and you're going to tell me whether you think it's gone up or gone down since coronavirus. Like the moment you heard coronavirus, you think, does this company go up or down? Okay, ready? Royal Caribbean Cruise Line, up or down? Go. Royal Caribbean Cruise Line, up or down? How fast can you get it? Up or down? So far, we got all downs. I got hope for you guys. 100% so far is saying down. Look at Mimi B. You're John Smith. You're down. PL. Gonzalez. Yeah, everyone's saying down. So look, 100% of you would have been right. 100% of you would have been right. So why didn't you just go short, right? Just go short RCL and make $1 million. I'll tell you why you didn't do it. You all knew that there was opportunity going down, but no one did it. Why not? I'll tell you why not. Because no one knew where the bottom would be. You were scared that if you bought 3 days ago, it'd go down even further. And by the way, you would have been right. You would have been right. And so what can we do with these options to live in this uncertainty and rock and roll? Well, let's put in a stock chart of Royal Caribbean Cruise Line. And I know I've gone over time, guys, but it looks like we haven't had one person drop off. Not one person has dropped off this thing. Amazing. Studly people. Give yourselves a 2 clap right there. So let's go Royal Caribbean. RCL, Royal Caribbean Cruise Line. And yeah, I'd say that baby's been in a little bit of trouble. But the problem you have is you don't know whether to make money or lose. If you'd have bought it here, thinking, okay, great, I buy here and get the rebound. You lose money. But if you short here, what if it goes up and you lose money and people don't know what to do? So one of the trades that we have that's got a really fancy, crazy name, shut this off, is called the put ratio back spread, right, Noah? The put ratio back spread.
Put ratio back spread.
We were in the Mentor Club 7 days ago, yes?
Yep.
Or 8 days ago. 8 days ago on Monday. 8 days ago, 7 days ago yesterday. And I said, Noah, this Corona thing's starting to get out of control. Why don't we go after airlines and go after cruise ships and see if there's opportunity there? And so who would like to see the risk graph that Noah has built in the last 7 days on Royal Caribbean? You ready to see this? On your mark, get set, risk graph. Right. Well, we got to get Royal Caribbean in there, RCL. Risk graph. Now watch this risk graph. Now wait a minute here. This is crazy. Okay, we've got 0 here. So if they go bankrupt, we're going to make $5,000, right? Right now, the price is right here. We've made $1,500 on this stock. This is not investing. We are not interested in buying Royal Caribbean. They're not on the list, folks. We don't want to buy them, but there's cash available today to trade Royal Caribbean. Now, this is what's crazy. The purple line is our money line as of today. You see this? 318. And in the 4 pillars of investing in Mentor Club, one of the things Noah and I are going to teach you is something called time decay. Write that down in your notes to learn time decay. So because options are made up of time, this will only lose money if the options run out of time. That's what this line looks like. So if this were to stay still right at this price and it were to stay still, we could lose $3,000. So that's how much it would cost to put in the bank, because potentially if Royal Caribbean doesn't move, and it just sits there day after day, the time in our option would run out. And as you can see over here in this box, on the 20th of June, we would be out, $3,000. So it takes $3,000 to make this trade. But here's the question. In this particular environment of Royal Caribbean, do you think that it's likely to stop right here and just go sideways? Or do you think it's going to move either up or down? Put in your answer. Sideways or move? What do you think it's going to do in the next 2 months? You think it's going to sit there in this market and just do nothing, flatline, or do you think it's going to move? We got 100% right tonight. It's almost like you guys are going to be able to do this. Well, check this out. We bought it about right here. It moved this way. Look at the graph if it goes down. $500, $600, $700, $800, $900, $1,000, $1,200, $1,300, $1,500 on a $3,000 investment. I don't know what the ROI is on that in 7 days, annualized, but it's got to be pretty freaking good. Okay, let me say it again. You don't need 30 grand to buy 500 shares here and, 40 grand to buy 500 shares there and, 100 grand to buy 100 shares here like I was doing in the investing stuff, right? Some of you guys don't have that. Great, let's trade our way in. But for $3,000, we can get that. And you know what? For $300, we can get less in some of these. So now check this out. What if it goes down tons? Well, now you're down to $195, but now you let the time decay, and in June, you're up $290. So if it goes up, by June, you got $290 no matter how high it goes. If it goes down quick now, you got $3,200, $1,800. So notice that on the downside, our pink line doesn't lose in the short term, and our blue line wins in the long term. So, and if it doesn't move, and it starts sitting, great, we sell at a lower price, like $500 or whatever it is. The other thing I can't get into is what happens if volatility increases. Noah, does this get more lucrative or less?
Well, if it increases, it gets more lucrative, and again, if it decreases, it gets less lucrative. So write that one down. You want to learn about volatility.
So if this volatility gets worse, we make more money. Is that what you're saying?
Yep, and I've got a feeling it might get worse.
And who knows? Who knows? And you're telling me this, RCL. You're telling me that if this thing continues to drop, this is how much money we're making on the drop. And if the volatility pops, we make more there. But if some reason this miraculously recovers by some act of supernaturalness, by June, we'll still be up $290. Is that what you're telling me?
Yep, absolutely.
How many of you want risk graphs like that in this market? Say, I'm in the Mentor Club. Say it, I'm in. Because I will tell you, Noah and I build these Noah builds them. I just talk about them a lot. Noah builds these every Monday. Every Monday, if you have a username and password, you'll see these. Now, let's play the game. You guys want to do another one? You want to play the game again? You want to play the up-down game again? Okay, here we go. Up-down game again. Here we go. This is our time, people. This is what the Cash Flow Academy was built for, right here. Okay, here we go. Let's go with Costco. Costco wholesale. How many think when this coronavirus first started getting ugly, would you say your Costco is going up or down? What do you think? See, you knew the answer. But you did not do it. And the reason you did not do it is because of this. Because no one knows if it's the right, what if I get in, it drops now? What, it could go different every day. How long is it going to last? See, you got a general feeling, but you got no confidence because your risk graphs, the reason you got no confidence is every risk graph you've ever known. If I go back to Tesla again, every risk graph you've ever known, looks like, if I can get a trade in here, let's see if I can get it in here. Every risk graph you've ever known Where's my buy on this, Noah? How come I can't buy? Here we go. Buy, sell, buy. Get it out of here. Every risk graph you've ever known looks like this. It's got an upside if you're right, and it's got a downside if you're wrong, and you're always scared of being wrong. So fix your risk graph and make it look like Costco wholesale, right? How do you say, what's Costco? Now look, we did the same thing on Costco, same trade, but we flipped it. We flipped it to where if it goes down, the most we can lose long term is $155 on the blue line if we go long term, and we'll hold it long term if it goes down. But if it goes roaring up, we get to use the purple line. And as it goes roaring up, we're up. It's only moved that far so far. That's it. We're up $1,000 almost exactly in that trade. Cost of trade $5,000. That's 20%. When did you put this thing on? A couple days ago?
No, yesterday.
Yesterday. So you've gone from $0 to $1,000 in one day, 20% on a $5,000 trade. Nice job, Noah. This is not investing. We're not looking to buy Costco right now. The price is pretty cockeyed what? It's pretty high cost basis wise to say, oh, let's get into Costco now. That's a pretty high cost basis. No, but we'll trade it. We'll trade it for cash today. We'll make $1,000. And we're doing this every Monday. Let's do another one. Square, up or down. Now, Square, before you answer, think about this. Square is for retailers that swipe credit cards on their phone. Retailers that are selling clothes, that are selling stuff, going out, right? Retailers. Is retail right now a great place to be if you're not selling food? Is retail going to go? You guys are getting it. So far, 99% are getting this. It's down. So far down. So let's look at Square. SQ, Square. Now, this is a ridiculous risk graph. I don't have the time to show you these four separate options that we've bought some, sold some, gotten out of some. I don't have time to show that, but I can, at least you understand the risk graph. Now watch this. If Square explodes in value and goes from $40 where it is today, and it goes up to $450, we're going to make $73. That's how much we'll make. We'll make $73 if this explodes. If this goes down, which you guys guessed it might, when did you put this trade on?
Oh, this one's been on for over a week now when it broke support, and I bought the 65 puts and sold the 50 puts. So the trade only cost $655.
This is called adjusted reef cash flow. So how much did the original trade cost you?
$655.
$655 to do this on Square. Now, it didn't start this way, did it? It did not start this way.
It started out with $655.
It started out with a possible loss. Look at the little blue thing. It started out with, if it goes up, you're going to lose $655, right? But after it went up, then you were able to sell another one, which was, and I said you were the master of trade, repair, and adjustment, right? That's your deal, right, Noah?
Yep.
Your trade. He adjusts this trade, and with one more option, he's locked this down. You got to understand, it did not start this way. We started with $600 risk. We had to spend $600 to make this trade. But bam, a couple days later, we lock it down with another option. Can you lose money in this trade? Is it possible to lose money anymore in this trade?
No, I got all the money we put in out plus $73.
So the least we'll make is $73 no matter how high Square might recover by April or June. But if this continues to go down, how much are you up right now in this trade, Noah, in the Mentor Club?
What does it say? $14,818.91?
$14,872.48. Incredible. Off of $600. Look, do we make money on every trade? No, we don't. Let's just make that freaking clear. Look, KHC, we're building this at 30 like I'm doing my own account. I want to show people do it. We're holding it. We're down 11 grand. We're down 11 grand. Square, we're at 14,000 though. And when did you put this trade on?
Look at the chart. It's been a week or two. It's only been since it broke support. So if you go look at the chart, whenever it broke the first support zone. But it's only been 2 weeks. I mean, tops. So
now to get in the Mentor Club, most of my classes are in the $2,000 to $4,000 range. Mentor Club is right around there. Let me ask you this. Who would be interested if I said, look, we're going to be sitting at home quarantined. We got all the time in the world to learn this. What if I gave out discounts on both 4 pillars and on Mentor Club? Who would like to join Noah and I Monday to do some more of these trades? Say I'm in. Let's see. Who would like that? What if I gave some ridiculously cool discounts that just made this a no-brainer? Like still value, fair trade, but we'll teach you. Would you like that? I'll tell you, it's going to be crowded, man. Look at this. It's going to be crowded. Nice job, Kyle Miller and Flynn and Tom and Jason and Justin and Michael and Mona and Samantha and Leanne and Vicky and Joe, and I can't even get through y'all. We're doing this. I'm going to get you guys some discounts here. I think you're going to like it. Okay, let's do another one. Last, or 2 more. Can you stand? Who wants to do 2 more? You want to do 2 more? Okay, we'll do 2 more and then we'll start wrapping this thing up. Okay, 2 more. Here we go. 2 more. We got IBM. Now, this is a tough one. Computer company, IBM. Up or down? Go. Up or down? Type it in. Up or down? Oh, this is interesting. Some people saying up, some people saying down. Now, how do you know? Okay, so we're split right down the middle on this one. So some of you are going to need some help. Split right down the middle on this one. How do we know whether we're going to choose up or down? I'm going to tell you right now. We look at the fundamentals. We see how the company's doing. We look at the chart and see what the chart's doing. Have you guys noticed that on both Delta Airlines and ExxonMobil, I found my buy prices by looking at good prices on the chart? Did you guys notice that tonight? That I went back in history and I looked very carefully about where I want. I chose 35 on Delta for a reason. I chose 55 and was wrong on ExxonMobil, but I had a reason. Didn't matter because I had insurance. So we're going to do IBM. Let's see the risk graph. First, let's see the chart. On IBM. Oh, getting killed on IBM. Down on IBM. Let's check out the risk graph and see what our position looks like on IBM. Are you ready? We're up $10,000 on IBM. And this is the same thing that happened before, is we started right here with something like this, where we started with $1,000 in. That was the trade. Cost $1,000 in. Noah goes in with his awesome adjustment. Now we are risk-free. The least amount of money we can make on this is $280. We are risk-free. And if it continues to fall, right now, this is good till April, ladies and gentlemen. Watch what will happen if IBM and this market fall apart and continue to fall. Look at that. This is at $90. We can sure go further if you want. But right here, guys, is called a standard deviation. This is how much this is likely to move based on how it's been moving. So if it moves to the downside, 1 standard deviation in that time frame, this will be a $22,716 trade on an original risk of $1,020. We are going to be in the Mentor Club on Monday, ladies and gentlemen. In the Mentor Club on Monday. On Monday, if you're quarantined, you'll be at home. If you're at work, you'll be able to come home eventually. You want to watch Netflix? You want to spend $5 a day over the next 2 months watching Netflix? Or do you want to be it's your choice, in the Mentor Club with Noah and I. Got one more. Now, here's a double whammy. Remember that I said I was looking to do Delta Airlines as an investment because I like the price around 35 and I have insurance below that for cost basis. We talked about that. But could you also trade this? Well, Noah's trading it in the Mentor Club. And Delta, and let me just I blew it. I gave it up. I was supposed to ask you if you thought Delta was going to be up in coronavirus situation or down. I'm going to just take a wild guess that you would have got that one right. But again, the problem was, do you have a risk graph that is palatable, right? So you go Delta Airlines, bam, where's Delta? Right there. And we look at the risk graph. Is that Delta right there? And here's where the price is right now, right? Here's where the price is. And notice there's a lot of options. He's the master of adjustment. I mentioned we ought to go short some airlines last week in the Mentor Club. So these are all less than 7 days old. And he's just adjusted this and adjust this. It's not risk-free. It will start losing money if this thing gets back up to $60 before the end of April. So we'll have to make an adjustment if by some freaking miracle the stock price doubles back by April. But as this falls, if it gets up to 45, we're only going to lose about $300 in this area. If it goes up even higher, we're going to have to make some adjustments. But if this keeps going lower and lower, this is the money that we make on the risk graph as it goes lower. How many like these risk graphs better than guessing on buying and shorting? Who likes these option risk graphs? Say, I dig the risk graph. I dig the options. You like it? It's just, look, it's our time. Can you guys understand my emotion tonight? Can you guys understand what the Cash Flow Academy was built for tonight? Can you understand it? I have so many friends that have called me, and for crying out loud, they're trying to send me their money so I can get short in the market for them. And I have to tell them, I don't give advice. I will teach you how to fish. I will not give a fish, ever. Because I believe in education. That's what we do. That's what we teach. Big hand for Noah Davison, ladies and gentlemen. That's freaking awesome. Noah, thank you, sir.
Oh, absolutely. And I have to give a shout out to my friend Juan down in Mexico City. He messaged me on my own phone. He's here tonight live with us. So hello, Juan. Thanks for coming.
Juan from Mexico City. You guys stay safe down there.
And he's in, by the way. He's in. So
nice job, Juan. Great freaking job. Now, let's talk business. I am not changing anything about how I do business. Not a thing. Look, we didn't know when we built our online platform and our virtual learning platform that it was going to be the only way people could possibly learn in the next 2 months. We didn't know that. In my country, the Center for Disease Control has limited meetings to 10 people. 10. My basketball coach for my son is about to get shut down if they go to 9. I'm telling you, it's brutal. We did not know that virtual learning would be, how valuable is this that we're going to learn this together. What do the next 2-3 months, what are the next 30 days going to look like? I've got a blueprint. I call it Andy Blueprint. I got a blueprint, and it's a 30-day blueprint where you catch up. Okay, you work hard. You get your 4 pillars in. You get it done. But I've got one more thing to show you before we do the blueprint. I did a class with Corey Halliday, and you can pop back into this, Corey, where we took 1 year of our lives and we built an ultimate options class. No one is getting in this tonight, okay? This is advanced. This is a year to get through. We don't have a year. And I was going to phase out my Quick Start Labs because, first of all, I don't sell them to the general public. I've only sold them to people who have been in 4 Pillars and Mentor Club, because if you don't have that foundation, you can't go fast. You can't go quick. And to tell the truth, we were almost going to phase it out because it overlaps a little. It does. I have had people clamoring to say, Andy, Corey, when are you going to do the Quick Start Labs this year? I'm going to go in the Quick Start Labs. I'm going to show you what they are. The Quick Start Labs take both these trades of investing, but more particularly these trades that Noah has done for trading, and we only pick our best cash flow trades, right, Corey? We probably do like 5, 6 best option cash flow trades.
That's right.
And that's what we do, Corey. Let's bring you back up here. Oh, Corey's happy face.
Yeah.
and what we did is we have 8 sessions. Write this down. We have 8 sessions, and we go twice a week. So I will not invite you into my meeting with Corey on Monday once a week, but I will invite you in with Noah on Monday once a week, a recorded session. We record the Mentor Club, and we send it out on Monday, recorded. But Corey and I, starting March 24th, everyone write down that date, March 24th, Corey and I are going to trade live. Okay, it's going to be at 7 p.m. Mountain Time, which is 9 p.m. Eastern. And on March 24th, we're going to start trading live twice a week. one in the nighttime, one in the morning, because some people work at night, some people work in the morning. We're going to alternate nighttime to morning. Yes, we're going to record them if you miss, because we've not only recorded everyone we've done in last year for 2019, we've recorded them from 2018, we recorded them from 2017, we recorded them from 2016 and 15, and we usually do them in the spring, May-ish, February-ish. Don't remember when we did that one. It's probably February-ish. This one was in February. And we're gonna do the Quick Start Labs next week and we really weren't thinking about doing them this year, but because of the circumstance, we're gonna make these trades. And the three things we're gonna do is we're gonna show you the risk on every one. We're gonna show you what we do if we need to get out. We're gonna show you the rewards. We're gonna show you the probabilities. We're gonna make some money on some and we're gonna lose money on some. We're gonna do it in a risk-free paper trade account with you. And we're going to do the Quick Start Labs. We're not only going to give you access this week on March 24th, and also I think it's the 26th on Thursday. We're going to do them twice a week for 4 weeks straight. So for the next 30 days, part of the 30-day blue cash flow blueprint, part of my blueprint is that you're going to be able to get into that meeting with Corey and I live, and we're going to be able to answer your questions. We're going to be able to, show you these trades at a slower pace where we're not running for 2 hours solid, and we're going to make it happen. Okay, we're going to make it happen. Now, I can't believe how many guys, look at everyone's still on here. This is incredible. So what I'm going to do is I'm going to spend about 15 minutes, 10 minutes, and I'm going to show you what we have to offer you. And what we're going to do is we're going to bundle the 4 Pillars class where you and I learn one-on-one. It's a recorded class, lifetime access, generally about a $2,000 class. That's what we listed out on the website. We're going to invite you into the Mentor Club where you can see it's like clockwork. Every week we post it. March 18th was the last one or 16th was the last one we did yesterday. And we're gonna send these out once a week where Noah does this type of stuff right here, which is awesome. And then we're gonna bring Corey in, and we're gonna do the Quick Start Labs where we build these trades week to week, twice a week, and we're gonna teach those classes live, and we'll give you access to all of the other sessions. And there's 5 years in here, times 8 sessions, 5 times 8. That's 40 sessions with Corey and I, 40 of them. And or you can watch Netflix. You can watch Netflix. Now, to get into the course, you go to andyblueprint.com. And I'm going to build you an opportunity. So just pay attention, focus, and we're almost home. First of all, let me see this. How many of you are really honest and genuine about the value you see here, and you see value for your investment dollar in education in learning these types of trades and these types of risk graphs? Just say, I am, if you see the value, or say, I see the value, whatever you want to say. And I'm just going to get a look at this. And I'm not just seeing these, I'm seeing explanation points on some of these. I see it, David Mickelson says. Jason, is that Paradise? He's got explanation points on his. There's value here for the money. So I'm going to show you this is normally, and each time I show this, I think you get more and more excited. Normally, we do the 4 Pillars of Investing at $19.97. That's 20 hours of instruction from me. Every single thing I taught on ExxonMobil, KHC, or Kraft Heinz, Delta Airlines that I taught as an investor is in that class. Everything I did and tons more is in that class. You can by the time you're finished with that class, you will have all the know-how that I used tonight to set myself up in these trades over the past couple of weeks. Number 2, the Mentor Club. We're going to give you a year, not just 30 days in the 30-day class. We're going to give you a year, and every Monday, Noah and I get together and we build these and we do these, and I need to be very, very transparent right here. Very important that this total right here, $25,000, it's not normal. You need to know that. We will have losses sometimes. I generally try to keep this around $5,000 per month instead of 25, but you can see that when the market moves, there's opportunity, and there could be more market movement. For the future, Corey, if you're still there, do you feel that the Federal Reserve, do you feel that what the Federal Reserve has done is going to affect currency value?
No question. Yeah.
You think
the money printing, the expectations are for $1.3 trillion of stimulus, and I'm going to take the over on that. I think by the time this is all said and done, it's going to be way in excess of 1.3 trillion. But no doubt about it.
According to, let's talk about Austrian monetary theory. Do you think that's going to help people with money in their pocket or kill people with money in their pocket?
Yeah, I mean, it's one of those things where when you look at currencies and the impact that they're going to have in terms of this asset purchases and all those things, there's always a cause and effect. There's always ramifications for everything that you do, right? And so as they come in to stimulate the economy and you look at the urgency they have to do that, they're using all of the bullets they have in their gun.
They shot them all.
Doing it with the markets. I mean, I realize there's some need for some emergency action, but to use all of it, to slash all of your interest rates, to do everything all at once with the markets off, 25% is just really kind of dangerous, because 2008 markets had declined so far. We'd been in a bear market for a long time, had a credit crisis, and interest rates at that time, prior to the issues, were about 4%. Now we're down at 0 interest rates. So they literally don't have much left. It's just a big problem, no doubt about it.
So in the Quick Start Labs, we'll be looking at the VIX. We're going to look, let me show you one pot. If you think, man, I'm late to the party, I wish I'd have got in all these trades. I'm late to the party. I wish I'd have learned this. It's too late for me. It's already fallen. First of all, there's going to be an upside too, but this is maybe the most important one I'm going to show you, is back to that fear gauge of the VIX. If you look at the VIX historically, right, with as much data as we can get, maybe on a monthly basis, something like that, you look at the VIX historically, these peaks don't usually last long. Usually we figure it out. The peaks don't last long. Here's the peak in the subprime meltdown in 08 and 09. That's how long the fear lasted, right? .com boom, this is how long the fear lasted. 1987 in the big one, that's how long the fear lasted. This is where our fear is now. If you think this is going to go back down and you'd like to see how to exploit that drop back down, we can show you volatility crush trades if you're interested in that. So we're going to do this. Now, I've never sold this to the general public. I've only sold it in a bundle. New live sessions start March 24th. These are the things Corey and I are going to be talking about. $24.95 is usually the value we put on that. We haven't sold it to the general public. We've sold it in a bundle. Bonus. 4 pillars of investing, train downloadable audios, $300 value. Bonus, printable transcripts. Those of you from the foreign country that English isn't your native language, they love these because we have transcripts of the 4 pillars training. Bonus, beginning investor boot camp by Corey and I. We teach you how to set up an account, what brokerage to think about, how to make those decisions, how to get a paper trade account for practice, how to make your trades and enter the trades. It's all there. The value of this training is about, that's almost everything we have in the Cash Flow Academy. $6,779. Tonight only, and this thing ends. There'll be a timer on this. Tonight, the whole thing $19.97. Who sees value in what we're offering you at $19.97? Not one class, not 2, not 3. Everything at $19.97, because it's time. It's time. Now, this is going to be based on what you guys are saying. Be patient. We're going to have a lot of people trying to register at andyplubrent.com. So if something happens technically, please be patient, right? We got a lot of people on tonight. So, make sure you keep going until you get in. Now, I have more good news. Some of you guys right now are saying, hey, Andy, I need this information now. Regardless of the price or the tuition, I need this information now no matter what. Who's in that boat? I need this information now no matter what. I've got to learn this in the next 30 days. Who's in? Who wants to see it? Regardless of that. Yeah, amazing price, David says. We're doing it. Can you handle that? He's locked down in Italy, man. So some of you, though, right now said, hey, is there any way you could spread this out? You know, right now with the virus, if it all comes at once, it's kind of tough. But if we flatten that curve and spread it out, we can deal with this virus, right? Well, what if we do this? Let's go to andyblueprint.com right now, and I'll show you what the website looks like, if I can find it on my computer. Hopefully I haven't shut everything down yet. And you'll see the same thing. You'll see a big button right here. And all you'll do is click on that button. And I'll tell you, tomorrow morning, you should take your risk class. You take that first class, that 45-minute class on risk, and get that thing done tomorrow or tonight. You know, burn the midnight oil. If you're on the West Coast, it's early. So you click on that baby, and we're going to do this. Now, single payment, I said, $19.97. If you want to spread it out a little bit, you say, you know what, $300 wouldn't be bad. And even if you have to say, Andy, I'm in a rough situation, but I see the value of the knowledge, and I'd rather, put this in than my phone and my internet, my Netflix every month. You can choose a 12 payment like that. Okay. You can do that if you want to do that. So you click on it, choose that payment schedule, and we'll spread that out over the year. And people say, Andy, well, can you guarantee me that I will make, $160 or, $166 in the market? The answer is no, I won't guarantee anything. But I do think that it is possible for someone to get a return on investment. I think it's possible. Can I guarantee it? The law would prohibit me from saying so. And even if the law let me, I wouldn't. So, at $19.97, some of us can just do that and you'll be in, done, we're working. Some of you, this will be a little bit easier for you, and some of you, this will be really easy for you. So regardless of where you are in your finances right now, this is important to me because I'm here to help. I'm doing business, no question. We aren't changing. Cashflow Academy will move on. We teach virtually. We're fine. But do you see this as a blessing in your life of all the education you've had the chance to do, college, grad school, whatever it is this a place for you? So I give you my love. I give you my hope, my optimism. I'm going to share with you something to end that I think is pretty cool. I've seen a couple of crashes in my life, and let's just bring them up. Let's just bring up the S&P to close. I've seen a couple of crashes in my life. I've seen this one that's happened. It took a year and a half to get here. A year and a half. I've seen this one. I've seen this one. I've seen this one. I saw 87. But I'm going to share with you something that's pretty special about the year 2009 when this bottomed out. I think it's pretty cool to share this when this bottomed out. When this hit bottom in 2009, our financial system had been crushed. It had been worked. The Fed had shot all their bullets back then too. And the unemployment was high. The market was at 750 points. People say, Andy, can it go? This took a year and a half. This has taken 2 weeks. They say, Andy, can it get here? Yeah, it can. It can. I don't know. I told you at the beginning, I don't know. It could possibly, maybe it goes up. But in the summer of 2009, after this crash, there was also something else that happened in 2009. According to the Center for Disease Control, that's also the last time we saw a pandemic of H1N1 swine flu. In 2009, it was rough. 60 million Americans caught the swine flu. 60 million. We had 274,000 people in the hospital in 2009. 12,000 people lost their lives. But after that pandemic passed through, there was opportunity once again in the market, and we began to build. There will be tough times. You can be an investor in these tough times. You can reduce your cost basis and turn into a positive. You can trade in these tough times when you have the right education. I can't guarantee how fast you'll learn this, but I can tell you that Noah, myself, our other teachers, Corey, we are committed to helping people learn how to deal with this stuff. I'm very grateful for what I've learned in these 2 crashes. I look with a lump in my throat at my own portfolio and the positions I'm in right now to move forward. And, if people want this, I can share it with them. So we went quite over tonight. We went 3 hours. Wow, longer than we thought. Too long, probably. But, well, what was it? 2 hours and 15 minutes, so not too bad. 2 hours.